Hi, this is Adam Khoo here, and in this video, I'm going to show you a very simple but very effective strategy that I use to generate consistent profits. And that's a strategy I call trading the range, or I call it the ping pong strategy. Now, before I begin, I'd like to just say thank you to all the retail investors in Singapore who came down to the Share Investor Awards this year and who voted for us once again. And for third year in a row, we have won the Most Preferred Financial Educator Award. As well as helping me win the Best Investment Speaker Award for the third year in a row. So thank you so much for your support. I really appreciate it. So let's begin. Now, this strategy involves finding stocks that are in a consolidation pattern, in a range, where you have a very clear level of resistance and a very clear level of support. And simply what you want to do, and what I do, is to buy when the price is bouncing off the support, okay, and selling when it's near the resistance. I call it the ping pong strategy. So simply I just buy there, sell there, and buy there, sell there, and repeat the process, wash and rinse, and make pretty good profits consistently. Now you may say, it can't be that simple. Well, it is quite simple, but there are a few things you need to take note of for this strategy to be effective and for it to be consistent for you. The first thing to take note of is when you look at stocks in a range, it has to test support and resistance at least 3 times for it to be a significant price level. So over here, you can see that it's been tested once over here, tested the support once, tested the support, well, let me just get rid of all these. Okay, there we go. Tested the support once, tested the support twice, tested it 3 times. So it's got to test at least 3 times to tell you that that is a significant level of support where there's more demand than supply, or demand exceeds supply. So it tells you that at this price level, 73.05, this 73.05, there are many buyers that are queuing up there waiting to buy. So the moment the price goes to 73.05, buyers will rush in and push the price up. Okay, so you need to have it test at least 3 times. At the same time, you want resistance. Not as important resistance, but still important because we want to know where the stock can go to. All right, so in this case, you can see it's tested once, twice, again 3 times. And this level is at the 82.25 level. So what it tells you is that at 82.25, there are many sellers that are waiting there. The moment the price comes in, the sellers will sell and push the price right down. So there's an overhang of supply versus demand at 82.25. Okay, great. So once you identify your support and resistance, you got to then ask yourself this question: do I have a good risk to return ratio? In other words, in trading, you can't win all the time. In fact, if you can just win 50% of the time or 60% of the time, you're making a lot of money, as long as your average win is more than your average loss. So how do we calculate this risk to return ratio? So here's how I do it. So what happens is, once I've got at least 3 tests, right, 1, 2, and 3, I wait for the price to come to that level again. Now, it doesn't have to be exact, but it's going to be somewhere near that level. And I want to see some kind of like a reversal candle pattern. So in this case, you can see that the price came down, okay? And then, now you could also buy over there as well, no worries, right? But it went up and it came down again. And this time, you see that this red candle touched that support level. Now, it doesn't exactly have to touch it. It could be just near it or just below it. It's fine, okay? But what I want to see is, I want to see after a series of red candles that are bearish, I want to see a first bullish candle. So in this case, this was the first bullish candle, okay? So once I see that, I would buy it the next day, okay? I could buy it at the market price. I could buy it at a limit price. I could buy it at a few cents above the high as well. I'm not so concerned about the way it's entered because I've got a very good buffer for this strategy. So it doesn't have to be a precise entry as long as it's near that price level. So in this case, I bought it the next day just above the high of this candle, okay? So I bought it at 74.15. So that's my entry price, 74.15. Now the question is, where do you put a stop loss, right? Because if it goes down below the support and breaks that support, you got to get out, right? You got to cut your losses and bail, okay? So I put my stop loss usually 1 ATR or average true range below the support level. you do not want to put your stop loss just below the support. Do not put it just below the support. Why? Because sometimes the price could, after you buy, it comes down and it hits the support, it just goes a bit below it. It hits your stop loss and forcing you to sell, and then it goes all the way up, right? And it takes you out. So you do not want to put a stop loss at an obvious point just below the support, because sometimes it could pierce the support by a couple of cents, bounce back up again, and you're screwed, okay? So I like to place my stop loss at least 1 ATR, average true range, below the support level. That gives me a buffer. Or I could just simply place it a few cents below the low of one of the previous candles. Like put it below the low of this, below the low of this, okay? So in this case, I measured 1 ATR, or average true range. You can watch it in one of my other videos on how I calculate ATR, but in this case, I use ATR. So I place my stop loss at 72. Let me see where I put my stop loss again. 72.52. That's right. Okay. So let me write it down for you. So I'm entering entry price at 74.15. Okay. My stop loss is at 72.52. All right. So what's my risk per share? My risk per share would be my entry price deducting my stop loss price. So 74.15 minus 72.52, that's $1.63. 1.63. That's my risk per share. My risk per share. So every share that I buy, I'm risking $1.63. Okay, this is also known as my 1 hour distance. Now, where's my target price? My target price would be obviously at the top of the range, which at this point, this resistance level was 82.25. Okay, 82.25, that's right. Now, I do not put my target price just at 82.25 because sometimes it could fall short and come all the way back down. So similarly, I don't want to be greedy. I'm going to put my target price just below the resistance level by about 1 ATR again. So in this case, my target price is 84 or $85, right? But you know, put it 84.99, 85 bucks. So my target price is $85. All right. And so what's my potential profit per share? So 85 minus 74.15, my potential profit is $10.85. Wait a minute, let me just check it. I think I got something wrong. No, it's not 85, sorry. It's it's $82. Right, my bad. I couldn't have been that good. I remember I wasn't that good, right? So my target price is $82. Okay. So 82 minus 74.15 is, that's right, 785. All right. 785. So that's my potential profit per share. Okay. So what's my risk to return ratio in this case? I'm risking 163 to make 785. Right? So 785 divided by 163, it's 1:4.5, 4.8 in a way. So in other words, I'm risking $1 to make $4.80, right? So you only want to take the trade if you have got a risk to return ratio of at least 1:3, okay? Now, why is that important? Because even if you're right half the time, you're still profitable. Even if you're right 30% of the time, you're still profitable. Let's take a look at the math. So in this case, you can see that your potential profit for this trade is about 4.8 R. Well, you know, let's be conservative and just round it down to 4 R. Okay, that's it. So in other words, we're risking 1 R, and again, R is a measure of risk, right? To make 4 R, right? 4 times your risk. And do watch my video on position sizing, where I teach you how to calculate the number of shares to buy so that when you have a loss, when it hits your stop loss, you only risk 1% or 2% of your capital. So this 1R represents 1% risk of your capital, for example, if you choose to risk 1%. And this represents a 4% return on your capital. Okay, so again, you have to watch my video on position sizing to understand how I calculate the number of shares to buy in order to contain that risk of 1% of my capital. Okay, so in this case, imagine if you do 20 of these trades, right? You do 20 of these trades in a couple of weeks or a couple of months, right? Up to you, right? And say you get a win rate of only 50% and you get 10 wins and you get 10 losses. Let me say that's not very good, right? Only a win rate of 50%. But check it out. Every time you lose 1% or you lose 1R. Okay, so that's a minus 10%, correct? But every time you win, in this case, 4R. So again, you won't always get a 4R win. So let's just say you get a 3R win, right? So 10 wins times 3%, that's 30%. Okay, so 30% minus 10%, your net profit or net return on your capital is 20% return, right, over 20 trades. So if you do 10 trades a month, you can do 20 trades in 2 months, which means in 2 months you get 20% return on your capital, which is, well, not fantastic, but it's okay for this simple strategy. All right. Now, what if your win rate is just, 30%? Let me say, that's the worst case scenario, right? So if you have a 30% win rate, right, what does that mean? That means that you only win 6 trades and you lose 14 trades. Okay, now that really sucks. It could be really lousy to do that, right? But even in that scenario, what happens, right? 14 losses minus 14R or minus 14%. But with 6 wins and each win you're making 3 times, you're making 18R, right? So 18 minus 14, it's 4R, which is still a 4% return on your capital in 2 months or 2% a month. Okay, so the point about this strategy, even if your win rate sucks, you're still making money. And it's almost impossible not to make money if you follow these rules. Okay, so how do we find these stocks? How do I find these stocks every day? Well, let me show you right now. So what I do is I go to Finviz, which is a very popular screening website. And when I go to Finviz, I just simply go to channels. Right? You see over channels over here. And this shows you all the stocks in a channel. So I'm going to click on channel. And there you go. So these are all the stocks in a range or a consolidation. So I'm looking for that ideal setup where I've got a strong support and resistance, tested 3 times, is wide enough. I get a 1:3 risk to return ratio, right? So on this particular day, I'm looking at REGL. And again, this is one of the stocks that looks like it's in a clear range. Can test 1, 2, 3, 4, 5 resistance tests, multiple support tests. So this is a very, very strong range. And currently can see the price is right at the support. Okay, so that could be a nice buy. Okay, so if I just pull off my charts, there we go. Okay, very nice range. So do we have a good risk to return ratio? That's the question, right? So over here, oops, just give me a sec. Over here, you can see that a potential buy would be, you could have bought it anywhere here, right? It's just that today, when I happen to see it, it's there, right? It closed here when the market closed. So before the market opens today, I could probably jump in and buy it right at the market open, which would be somewhere around 50.49. So that would be my entry price at 50.49. And again, where would I put my stop loss? I'll put my stop loss, again, not just below the support level, but 1 ATR below the support or below the previous low. So this was the previous low, as you can see over here, previous low. So I could put a stop loss below that previous low, which would be 49.95. All right, this would be my stop loss price. So what's my risk per share? So 50.49 minus 49.95. That's 54 cents. Okay, so I'm risking 54 cents for every share I buy. Now, what's my potential profit? Well, the resistance over here is at 52.73. So that's my target price. So 52.73 minus 50.49, that's 224. Okay, so I'm risking 54 cents to make 224. 224. So what's my risk to return ratio? Well, I'll take 224 divide by 54 cents. That is 4R. Okay, so again, a beautiful setup, risking 1R to make 4R. And all I gotta do is just be right half the time, and I'm making a lot of money. And that's why I make money consistently from this setup. I do hope you found the video useful, you found that strategy useful. And again, it's a very simple strategy. It makes pretty good money, but if you want to learn more advanced strategies, intraday trading, scalping, whatsoever, you can visit my website at piranhaprofits.com. And you can enroll in our professional online trading course. If you're in Asia, you can attend our live training courses. And you can find out more at wealthacademyglobal.com. If you want more videos, do subscribe to this channel. And a quick shout out, I'll be launching my online professional Forex trading course in about 2 months. So do watch out for that. Adam Khoo signing off, take care, and happy trading.